Okay. Um, Good evening. You're welcome. Yeah. So today is our second day of our training. We started on Tuesday. We did have a session yesterday, so we're continuing today and Friday. That's tomorrow. Oh, we will be going further in our training. Um, like I said on Tuesday that we are not dealing with the basics of forex trading. We are dealing with analysis. That is, sorry, technical analysis to be precise. That is our focus for this training. If you want to go back and study the basics of forex trading, I believe that most everybody has those links, those classes I did for the basics of forex trading. That's why are moving straight to the um, technical analysis of forex trading. Okay, so at the on that was on Tuesday. We talked about the support and resistance, which is a very fundamental on the basis of technical analysis. If you don't understand support and resistance very well, you will have trouble doing technical analysis very well. So if you have understood um, just support and resistance, 50% of your journey in trading, that is your technical analysis journey, has been solved. That is what you should know. Okay. So we talked about support and resistance on Tuesday. Also talked about market trends. That is the uptrend. Talked about the uptrend, the downtrend, the ranging market, and the shopping market. That's what we saw on Tuesday also. This shows that we actually learned a lot of things for that. So the next thing we're going to be looking at is the candlestick pattern. Now, before I delve into that, I want to quickly say this that there are lots of strategies in the forex market for you to make money. There's no doubt about that. There are lots of strategies that will give you money, a lot of money in the forex market. You just have to know a strategy that will work for you. Those strategies that work for you and stick with it. Why I say so is that almost, let's say, all strategies are profitable if you know them very well. All strategies are profitable. So you don't have to know all the strategies to be profitable. You just need to know one of them and apply it. You're good to go. Okay. So and some persons will come to me fair and see if I trade this, if I trade this, if I trade this, and they say that if you're not trading those strategies, that means you're not really making money from the market. But I've discovered that it's not true. You can make money from the forex market even with trading with indicators if you know your indicators very well. You can make money from the forex market trading with indicators. You can make money from the forex market just trading support and resistance. You can make money from the forex market just trading trend line, using your trend line very well. You can actually make money from that. So you don't have to know all the strategies in the market for you to make money. I'm actually speaking from experience. I know about indicators. I know about ICT, a little, not much. I know about SMC, and I know about this pattern I'm using now, candlestick pattern, chart pattern. The truth is that they are knowing all these things actually led to confusion. You understand? So sometimes some strategies are giving you that showing you that this trade is going to buy now. The strategies are showing you that okay, this trade is going to buy in after one thing, maybe an hour time, not now. So it takes a sell limit. So why some persons are entering now, some persons are placing sell limits or buy limits. It's the same strategy. No, it's different strategy but the same market. And to some extent, it may the both of them may even work out. You understand? So you don't have um to jump yourself or drown yourself in knowing a million strategies. No, you just have to know one strategy very well and you are good to go. That's how the forex market works. Okay. So don't I know a lot of liquidity grab, liquidity pool, POI, PO all of all those stuff. They are nice stuff, but I don't really pay attention to them because the easier the better. That is how forex trading works. The more you complicate things in your brain, the more you are not profitable. But when you make it simple for you, you will be profitable. I hope this is taking. I know why I'm saying this because a lot of persons have come to my DM and they're asking me, they were like, so how do you make profit with just trend line? And I'll just smile and when I show them my chart, it's not about making money, not about the strategy used in making money. Okay. So today we will be going into what is called candlestick pattern. That's what we'll be learning now today. And we actually have one candlestick pattern, we have two candlestick patterns, and we have three candlestick patterns. Okay. So we will be starting with one candlestick pattern. We will be starting with one candlestick pattern. So for the one candlestick pattern, let me write it out. One candlestick. So for the one candlestick pattern, we have the pin bar, we have the doji. Although I don't really use the last one, but let me just indicate it here. We have the spinning top and bottom. Okay, so that these are the patterns that we have. Pin bar, doji, spinning top and bottom. So the pin bar looks like a hammer, something like this. So this is what your pin bar looks like. It's as simple as this. This is so now let me quickly shift this in. Remember we did this on Tuesday. As I'm teaching, if you have questions, drop them so that I'll be answering your questions along the way. That was how we did it on Tuesday and this is how we still do it today. Just drop your questions as we are teaching, okay? So this is the pin bar. It has a very small body and a very long wick. A small body and a very long wick. These are what the pin bar looks like. Now I also stated that in forex is always opposite, like we have bullish and bearish. So it's always bullish or bearish. So we have these two as the pin bar. We have these two as the pin bar. Okay, so this that's this one here. The first one is the bullish pin bar, while the second one is the bearish pin bar. So how does this work in the market? So for instance, I have a trend, a downtrend now. So you see that what you are learning is adding on top of the other. We learned about downtrend on Tuesday. So we have a downtrend like this. And all of yourself when this pin bar was formed. The next thing you are going to be seeing is that price will start going up like this. Like the price will become an uptrend. The market will change to become an uptrend. You understand? So this is how it works. So when you see something like this, what you do is to place a buy order. When you see something like this, what you do is to place a buy order Remember, I'll be showing you examples, so don't get confused yet. We go to the chart the way we do it. We go to the chart and we just start seeing examples. So for this bearish pin bar, maybe the market was in an uptrend like this. Market was in an uptrend. It gets to a point and it forms this bearish pin bar, and the market starts coming down. Now, what is this point that the market gets to? If the market was in a downtrend, a pin bar was formed. That means it got to a support. Remember support and resistance. Everything is building up. Remember support and resistance. So maybe the market got to a support and formed this pin bar. And the next thing you see is that the market starts going up. This is it. Now, for the bearish pin bar, market was in an uptrend. That means market was going up. It gets to a resistance. This bearish pin bar was formed, and the market will start coming down. So when you see something like this, what you do is to place a buy order. For a bullish pin bar, you place a buy order. For the bearish pin bar, you place a sell order. I hope I'm explaining it. I love giving simple explanation so that everybody will understand what I so that I've shifted my analysis so that everybody will understand what I am saying. So let me I think I have to delete no let me not delete it because we are looking for examples now. So this is let me go to a higher time frame. Okay, now look at a resistance that has been formed. I'll draw the resistance again. I'm going to take it out. I want to draw it again so that we see it properly. Don't mind me. I'm very fond of marking my chart. I always do that. I can just, maybe I don't want to trade. I can just open the market. I'll be marking support and resistance. I do that a lot. I'll just be looking out for support, resistance, and be marking those zones out. That is very good. So this was a support that I marked here. Look at it. I will expand the and show us properly. Okay, look at like we learned that day, a broken support becomes a resistance. So a broken resistance becomes a support. So this was a resistance. It was broken through, it became a support, support, support. And it was broken through, so it became a resistance now. So it is now a resistance. So that's why you see this line here. And I also marked another resistance here too. So remember we learned about diagonal resistance too, not just horizontal support and resistance. So this was the one I marked also. From this connecting these eyes like this. I think I should go to a plain chart so that it will not look as if I've marked my chart before. Let me go to a plain. Ooh, I'm, I'm very good at marking my chart. Okay, let's do it this way. Let me look for another pen that let me add this pen. Okay. Woo. Oh, okay. Let me just clear everything so that we do the stuff again. Because sometimes when I see the people will just think that I've gone to mark my chart before. I don't like you understand. So let me look for fresh a fresh chart so that we learn it together. Okay. So let's go. This is cat CHF. This is cat CHF. Wow, it has been on a massive downtrend. So maybe I'm going to be marking them from a very low time frame. So let me see if I can connect this resistance here. Okay, I've connected this resistance frame. So let's go to a lower time frame. This mark Q. The first thing you do when you want to do your analysis is mark support and resistance zone. If you want to do your analysis, you first of all mark your support and your resistance. Hope this is taken. When you also do your analysis, mark your support and your resistance first. That's the first thing you should do. Okay, so I've marked my support and resistance. I've marked my support and my resistance. Okay, so after doing this, I'll go to a lower time frame to look for candlestick patterns. And the candlestick pattern we are looking for now is the bearish pin bar. The bearish pin bar, that is what we are looking for. Let me find this chart like this. So I've marked a support and resistance, and I'm scrolling through my chart now. I'm actually okay. No, that is a single top and bottom. I've not really seen a bearish star pattern, but I've seen a bullish star pattern that the market respected. So let's have it here. So we have this. This is support. Let me mark it first. These are charts. Okay. Let me drop it down. So you see, I connected the zones, the support and the resistance. These are to connect it to. These are to connect it to. So I've expanded my chart and I saw look at a bullish pin bar that was formed there in a support zone and market went up just like that. Now a bearish pin bar was not formed, but I'm seeing another candlestick pattern that we'll look at to later today. We will look at for later today. So that's I will not see it here. Then this is another bullish pin bar that was formed here. You get, and market continued up. Like I taught you on Tuesday, this is a ranging pattern. This is a ranging pattern. So market was at a support, it went up, came down. I believe, let's see, I believe this pattern is even better like this. Let me draw it out again. Just saw something else that I think is, let me see, let me connect it up and see first. If it doesn't work out, I'm going to delete it. Okay, I think this is the actual pattern. Am I correct? Yeah, this is the actual pattern. So let me delete this. Okay, hope we get this now. This is, when we get to this pattern, I will explain it. We have not gotten there. But this is the name of the pattern actually. So we see this pattern. This is actually a signal because I think we are seeing this early. We're actually seeing this early, kind of. So we are seeing this now. This is your bullish pin bar that was from there. Let me expand my chart. This is a bullish pin bar that was from there. Market went up. The pattern was from came down. It didn't get to the actual resistance. Went up again, formed another pattern, came down, formed a bullish. Remember, we are looking at bullish star pattern. Formed a bullish, sorry, pin bar, and it went up. Now it formed a bearish pin bar now, and it's wanting to come down. Wanting to come. I don't want to give a signal in the live call, but this is actually a signal. Though I don't want to say self signal, all things being equal. That means if there's no manipulation and all of those stuff, this is actually a sell signal with a 30 pip stop loss and a take profit target of like let's say 100 pips. But you see this is a signal, okay? I not say you should go and take it off, but if it goes well, I will send it to the group. Okay, so that's that. But if you want to swing it too, if you have swap fees and all of the stuff, you can actually take this trade. Now let's look at other examples of this pattern. Okay, I'm seeing something like a range. Is this a range? Yep, but we're actually looking for a pin bar, and I will not take this because I'm not seeing a pin bar form at my support or at my resistance. So I'll pass this one. I'll pass here. Hope you are understanding what if you don't have any question, please drop it in the comments so that I will take them. If you know you have any questions, please and please drop it in the comment section. Okay, so the next candlestick pattern we are going to be looking at. I hope this pin bar is clear enough for everyone. Hope it's clear enough for everyone. I want to continue. I want to go to the next pattern, which is the doji. Our second pattern we're looking at is the doji. It's it's like this, like a plus sign. This is what the doji looks like. Simple. And it's actually a very cool candlestick if you're really learning. So this is what the doji look like. And we have the bullish doji like this. We have the bearish doji like this. Simple. So like I've explained before, the bullish and the bearish are opposite. So that is to say that for the bullish doji, if it is formed as a support, remember that we started all this from the support. If it is formed as the support, that means that the market is going to go up. So what you do is to place a buy order. If it is formed as a resistance, it means that the market is coming down. That means you place a sell order. That is how it works. So the bullish doji is like this. The bearish doji is like this. So let's quickly look at examples in our chart. We're still on the same pair, CAC CHF. But if I don't see any example, I'll go to another pair to look for it. That's how you do analysis. This is how you learn. Wow, this is a very beautiful symbol, and the market just went. Okay. Oh, let me look for it in smaller time frames. I'm looking at the doji. I've seen one, so let me highlight it. Yeah. Now some people used to confuse doji and timber. Let me let me explain now. A doji has a very flat body. When I mean flat, flat is flat, like the example I showed you. A doji has a very flat body. However, a timber has a small body. So I hope you get the difference. A doji has a flat body. A timber has a small body. Hope is clear so that you don't get confused. A lot of persons may become confused with a timber or a doji. So I've seen a bearish. This is let me start my chart now. Okay, so this is a bearish doji. That's here. This is a bearish doji, and we see that when the doji was giving, market just kept coming down. I think this was the beginning of a downtrend for this particular pair. So market just started coming down after this doji was giving. Okay, so what you do is to place a sell order here. Place a sell order, put your stop loss a little above, not just some persons will put their stop loss here. No, that's wrong. Put your stop loss above the mark and watch it come down. Okay, so let me look for another doji. Hmm, one. Okay, so this was a resistance that market was playing with here. Immediately this bearish doji was given, market started dropping. This is US dollar index. So let me look for. Hmm, this is an actual doji. that was given here. Yeah, a doji. Although it formed a line with other candlesticks and market just started going up. So, okay. Do we understand this doji explanation? Mm, I'd say a very powerful pin bar that was formed here. And market came down powerfully. So, okay. All right. So let me not just be looking for. Let's go to the next candlestick pattern. Okay, I want to quickly shift this in now. Whatever pattern we're looking at, if it appears against the trend, it is invalid. So for instance, if we are in an uptrend and a bearish star pattern is formed, that bearish star pattern is invalid. It doesn't count. You get? If we are in an uptrend and a bearish star pattern is formed, why am I saying star pattern? A bearish pin bar is formed, that pin bar is invalid. If we are in a downtrend and a bullish pattern like is formed, that bullish pattern is invalid. So it must be formed in line. Mark the word, it must, is a must. So this is the filters you should have for your trade. You should have strong filter system so that you don't take the wrong trade. So that you also take high probability trades. Your filter system should be strong. So, for instance, a trade is at a support, fine. So if it is at a support, okay, okay, I'll take your questions later. Let me just explain this as I will say. Now, we know that a trade is at a support, that is cool. But if I don't see a bullish signal from at that support, I don't take the trade. That is how strong my filter system is. So you need to develop it so that you will take trades that has high probability. Not trade that okay, just say a support. You don't know if this support will be broken. Just that it's as a support, you just enter. Like on Monday when I set this trade, is it GBP CHF trade, and it was actually ranging. So we sold, and someone asked if we can sell, if we can buy when the trade when the market gets to the support. I say no, we wait for a confirmation. And thankfully, when the market got to the support, it broke it through. Anything we just enter because the trade is at a support, we would have lost a lot of money because before, let me even show us the trade. Think you see here. Yeah, this is it. I'm showing us this thing so that trading is easy, oh, but some person just want to complicate it for themselves. So you should and you must have a very strong filter system in order for you to trade. So like this is the trade right here. It was doing this range. It was actually doing this range like you see. So I marked it out and replace a yes, it's this trade. Replace a strength. So the person was like, are we going to buy when it gets to a support? When it gets, I said no, we have to wait for a confirmation. So the moment I placed this thing here, just in case, I was just waiting. And when it got to this support zone, it broke through it. So I think I just came and said, okay, you people should enter. Would have you can see how well the thing fell. So even though the trade is at a support, your next signal that you should look out for is this pattern, this candlestick pattern that I am teaching you. So we have seen the dodgy, we have seen the pin bar. So let me take this question. How does power one differentiate pin bar from armor? Okay, pin bar and armor they are the same thing. They are just synonymous. So you can either call it a pin bar or you can call it a armor. So it's the same thing. Although some yes, it's the same thing. Okay. They have names for the if it is bullish pin bar, if it is bullish pin bar, they call it armor. If it's there, they call it a spinning. Is it spinning top? I've forgotten those stuff because I found out that it's no longer necessary. Provided when I see it in my chart, I know what to do. So pin bar hammer is the same. They are the same. They are not different. They are just synonymous terms. So based on diagonal support and resistance, you map out from that pair on daily time frame, waiting for a confirmation to sell. Will you still leave it on daily time frame until you place a sell? No, I won't. I will go to a lower time frame like 1 hour to take my trade. So let's see this. Let's go back to it again. Is this what we marked now, right? Did I add it to my pay? Okay, I didn't add it. I just used it for example. I think we have passed though. Have we passed? Okay, we are here. So for instance, for this trade, I'll go to a lower time frame like um this is a 1 hour time frame. Although I don't do below 30 minutes, so but now my filter will now be that okay, a I've not really seen a candlestick pattern, like a bearish candlestick pattern. So I may not necessarily take this trade until it is formed. Sometimes it is safer to do so let me just bust your bubble. When you are looking for a candlestick pattern to be formed as a resistance or support, it may not form it, so it will just start coming down like that. And you'll be like, what happened? I was waiting for this. It happens sometimes. But you actually be safer when you wait for this pattern, this confirmation. It will make you take lower trades and trade with higher profit rates. You understand? So I will not wait for it to be formed on a daily time frame. I'll go to lower time frame like 4 hours or 1 hour and check for the for this case now check for a bearish pattern for me to enter the trade. Hope that is clear. Will you leave it on a daily time frame to see a bearish pin bar that signals it, or you go to a lower time frame to check? Okay. Okay, let me just play off. I think I've answered that just now, but I will not necessarily look for a bearish pin bar. You understand? Because there are a lot of patterns we are going to be looking at for. So I will look for any, you understand, any. Because sometimes you will not see a bearish pin bar. What you will see is a dodgy. You will not see a dodgy. What you see is, let's say, a star pattern or an engulfing. You understand? So it must not be bearish. The reason we are learning all these strategies, all these candlestick patterns is that in case you don't see one and you see another one, you will still be able to trade. That's why we are learning these different patterns. In case you do not see dodgy, you see pimper, fine, you're good. You not see pimper, you see star, fine, you're also good. You notice star, you see engulfing, you're fine, you're good to go. You understand? But I know somebody that say that it is either star pattern or nothing, and it's still okay. So even though it says pin bar, it will not trade. If it says dodgy, it will not trade. It's only that star pattern. It's when it sees that star pattern that is the only time it trades. And I really applaud such discipline. It takes a whole lot of discipline to do that. Okay, so it must not be a pin bar. That's why we are learning all this stuff. So the next candlestick we'll be looking at, though I don't really use it, is what they call the spinning top and bottom. I don't use it so because it's not every time I see it, it's like this. Like the body is in the middle, but it's small. The body is in the middle and it's small. So this is the spinning top and bottom. Okay. So um to some extent, it just shows you that a trend is going to continue or or a trend is going to change. So let's look at an example. Now, this spinning top and bottom does not have it doesn't have what is it called? It doesn't have bullish spinning top or bearish spinning top. It's only the color that indicates that because it's always like this. So It is either bullish or bearish based on where it appears on the chart. So if it appears as a support, that makes it a bullish spinning top and bottom. If it appears as the resistance, it makes it a bearish spinning top and bottom. Hope this is clear. So let us look for examples of this spinning, the spinner. Why I don't really like trading it because it's not everything I'll trade, so I just let it pass. Once I see it, I may not necessarily take a trade. Okay, so I've seen one, but it happened in the middle of a trade, and I don't want to give it as an example. Okay, this other one happened at a it happened at a resistance and market dropped very well. So let me expand my chart so that I'll see it clearly. Here is it, spinning top and bottom, flat body at the almost at the middle of the shadow, and you see the very sharp drop that this market did after it was formed. So when it appears as a resistance, you sell. When it appears as a support, you buy. These are the spinning top and bottom walks. Let me look for another example. Hope you are getting everything that I'm saying so that I'll not be speaking jargon and you guys are not carried along. Mm, whoa, I'm not seeing any good example here. I actually don't trade it, so my eyes is not really on it. Let me look for it in another pair. Let's watch. See, okay, this one is a dodgy. It appeared that the support here and market went way up very well. So let me look for. Hmm, I'll look for it again. I'll go to the next candle. Mm, mm. Okay, let's go to the next candle. Our next candle is the next candle we'll be looking at is the engulfing. I want to write it as last. So we have now we are done with one candlestick pattern and where we saw mm, the pin bar engulfing, sorry, not engulfing bar, dodgy, spinning top and bottom. So the next we are looking at is the two candlestick pattern, and there the first one we have is the engulfing bar. The next one is the tweezer. Hope this is taken. So why it's called two candlestick pattern is that there are two candlesticks that are formed together. Two candlesticks formed together. So it's not complete without the other. So if you see one, you do not see the next one, please, that is not the pattern. You understand? If you see one, you do not see the next one, that is not the pattern. So it must be the both of them together. That's why it is called the two candlestick pattern. Okay. So let me draw the engulfing first. See, we have the first candle. The first candle, what am I doing? See, first candle is like this. Okay, let me delete this. I didn't do a final though. Okay, all right. So for this, we have something like this. We have this, we have this, and this. So this will be our first candle. Then we have this. Oh, Jesus, that's off. We have this, we have this, and this. So this will be our second candle. It's called an engulfing. So this first candle is small, the second candle is big and totally covers the first candle. This is why it is called an engulfing candlestick pattern. Why? Because the second candle is covering the first candle. Now, normally as usual, we have the bullish engulfing and the bearish engulfing. It must be the opposite. Bullish indicates that the market is going to buy. Bearish indicating that the market is going to sell. Simple. So for the bullish candles, for the bullish engulfing, your conditions are this. Number one, your first candle must be a bearish candle. Please, I hope you are taking notes. For the conditions of your bullish engulfing pattern, the first is that your first candle must be a bearish candle and it must be small. The second candle must be a bullish candle. That's why it's called a bullish engulfing pattern. Must be a bullish candle and it must appear as the support. So I've given us three conditions for this candlestick pattern to be valid. One, it must be formed as a support. Two, the first candle must be a bearish candle. Three, the second candle must be a bullish candle that totally covers the first candle. So that those are the three conditions. Now we flip it over. The second one, which is the bearish engulfing pattern, the first condition is that it must be formed as a support, sorry, as a resistance. Is a must. So mhm, must be formed as a resistance. That is your first um that is the first option, like the first condition. Must be formed as a resistance, one. Two, the first candle must be a bullish candle this time. You get, the first candle must be a bullish candle. Your second candle must, that is the third condition. The second candle must be a bearish candle for it to be what? To be valid. So I hope we get this condition so that we'll not get confused and say, but I saw two candlesticks that are formed together. No, we saw something different. So these are your conditions for it to be valid. So let's go to our chart and we will see examples. I'm seeing one here, but let me scroll. Let's scroll. Let's scroll. Let's scroll through the chart. Okay, I've seen one here. And then this will be a support. It's a very beautiful bullish um timber that was from there. So let's go to a lower time frame, let's say 4 hours. Mm. These were all given timbers. Okay, I've seen an engulfing bar pattern here. So I'll expand my chart. So you see the first candle, a bearish candle, The second candle, a bullish candle. This is a bullish engulfing bar pattern. So totally covering the first candle and market went up. Market just went up. Market just went up and just like that. A bearish one was given and market started coming down. Market started coming down. So I saw one. Okay, a bearish stop pin bar was given here. Oh, why am I missing my word? Sorry. Bearish engulfing. Your first candle small, the second candle covering the first, and market came come just started dropping down. Okay, so this is the engulfing. Let me just look for another example. Let's see this guy here. Okay, this was our first candle. Second candle, this is a bearish engulfing pattern, totally covering it, and market just starts dropping. Hmm. Let me look at some trades that we are even on and see if I've seen okay, yeah, bullish market came and did its thing. Okay, we entered the trade yesterday. I didn't see it from this beginning, but I caught the second leg, like the second pullback. So you saw that this trade gave a bearish pin bar and market started dropping. And yeah, it gave a bullish. I Okay, we entered this. Did we enter this sale? But I sent the buy yesterday before market close, and this actually did. Is this 70 or 50 pips? It's still trying. It's still around the entry so, but we have made some good amount of pips from the trade. Now this gave a. Let me remove this one first so that we see it clearly. This actually gave a bullish engulfing bar pattern. You see, this is your first candle, your second candle that totally covers the first, and market went up to this point. This pair is highly volatile, so that's why this small move now gave us up to 70 pips because the pair is volatile, it's a very volatile pair. So this is it. So what's on that trade? I'm trying to use the present trades that we have so that it's not there as if I'm speaking jargon. So okay. Okay, this one we took this trade yesterday. This gave a bearish doji at a resistance. This is my resistance point. It gave this bearish doji and I told us to sell, and we all know we are all in the group. So okay, so that is that for that. So the next, hope we get the engulfing. Well, if you do not get, you can ask questions. Let me look for this engulfing is big though, but it's still an engulfing pattern. So your first leg, your second, market just went up, came down, went up again before it started coming down and went up. So the market was actually ranging. I thought it was ranging pattern on Tuesday. This market was ranging before it finally went up, got to this resistance and started coming down. So the next we are going to be looking at. I don't like teaching it because I barely find it to give examples with it. That's the truth. That's why to some extent I don't like teaching it. So let me look for. I want to look for the example first before I talk about it. Or is 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 very rare to find this thing. Depend on like good, like say no if we dey see good. So you don't see it on time on the chart. Or sometimes if I want to teach it, I just go online and browse it out. Okay, I think I give up. Let me look for it. No, no, no. It's actually the tweezers top and bottom. Okay, I talked about time frames on Monday, on Tuesday, sorry. Time frames I talked about, I said I use higher time frame because markets were spread trades in higher time frame. So I use daily 4 hours, but you can use 1 hour. Now the thing is that everything I'm teaching you will also be found in 1 minute time frame. Let me go to 1 minute. If it will allow me check 1 minute. Everything you see me, everything will be found in 1 minute time frame. Now look at a bearish pin bar here. Market came down. Bearish pin bar, market came down. Let me move further. So everything I'm teaching you will be found in all the time frames. But the reason I don't use lower time frames is that it's not really strong on lower time frames. Let's go to 5 minutes now. You see them there too. There's Simba market came down 5 minutes time frame. Um, a bearish engulfing bar market came down 5 minutes time frame. So you see that it respects all of it in any time frame. So I just don't use smaller time frame. This is 15 minutes time frame now. The same trade we took now, this 15 minutes time frame, this you look at the bearish dodgy was from a market came down in 15 minutes time frame. So you get the only thing is that with lower time frames, you have quicker entries and smaller stop loss. However, you will actually have riskier trade, like your trade will be more risky with lower time frame. But you have quicker entries and smaller stop loss with lower time frame. But me, I don't really do lower time frame. Look at a bearish engulfing bar pattern was from their market came down in a 15 minutes time frame. So it happens in any time frame, all the time frame. It happens there. Okay, so let's get on with our class. Hope is clear, Peter. Hope is clear. So the next one we're supposed to look at is tweezers, but I will not be showing you that on my chart because it rarely appears on the chart. Okay, it rarely appears. We have other things to cover. So the tweezers is two candlesticks, two equal candlesticks. That's the tweezers. If it is not equal, it is not tweezers. I want to actually draw it out. So we have this. For the tweezers, we have something like this. And the same size. Okay, my size is not equal or equal, but you understand the same size of candlesticks. Now it is a bullish tweezers when the first candlestick is a bearish candle, the second candlestick is a bullish candle, bullish tweezers. It is a bearish tweezers where the first candlestick is a bearish candle. It is bullish when the first is bearish, the second is bullish. It is bearish when the first is bullish, the second is bearish. Hope you get. So when it is a bullish tweezers, it is going to buy. Market is buying. When it's a bearish tweezers, it's going to sell. Market is selling. I hope we got that. So I want to actually go to my okay. I want to share my screen now so that I'm adding another. Okay. Can we see my screen? Can we see my screen? Continue sharing now. Can we see my screen? I want us to know. Okay, let's give it some time. Maybe to come up. I'm actually sharing another page here. So I think my network is slow, but it should have been showing by now. Can we see it now? It's not showing. Whoa. Okay, let me go back. Let me go back and see. All right. Okay. Is it now? It's not showing. It's not showing. It's not showing. Mm, yeah. Is it visible now? Oh, what's wrong? Okay. I believe we cannot see it. I believe we cannot see it. And can we see it now? Okay. All right. So I actually want to point out tweezers for us. That's why I came here because going to look for it in the chat will actually take some time. And I don't want to use all of the time for that. Okay. So this is what the tweezers look like. Equal candlestick pattern, equal highs, equal lows, and to some extent, sometimes I do prefer the ones with equal as it called. I do prefer the ones with equal height. You understand? So this is what the tweezers look like. The first candle bullish, the second one bearish. So this is a bearish tweezer. Market starts coming down. The first candle bearish, the second one bullish. This is a bullish tweezer. Market starts going up. So remember the conditions remain the same. It must be formed as a support for a bullish tweezer and it must be formed as a resistance for a bearish tweezer. Hope this is clear enough so that we don't get jumping out in and out of trade not just because we see tweezers and the conditions were not properly fixed. You understand? So when you place a sell order for a bearish tweezers, you put your stop loss a little bit above the pattern that is formed. Put your stop loss a little bit above the pattern that has been formed. For a bullish tweezer, put your stop loss a little bit below the pattern that has been formed. Okay, so I hope this one is clear. So let me go back to my chart so that let me go back to my chart so that we look at the next pattern. All right. So the next pattern we'll be looking at is this will now be three candlestick pattern. Another three candlestick pattern we have, I only teach one, we have others but there's only one I trade, and that one is star pattern. Star pattern has a very probable high success rate. Star pattern, this is the only one I trade. There is what is called three white candles. Look at this beautiful pin bar that was formed here. Yeah, I just saw it now. Our market dropped very, very well. Yeah, again, market dropped well. This one that we just entered, we started with it yesterday, dropped very well. I just saw them. Okay, so let's continue. Um, the star pattern is made up of three candlesticks that were formed together. Star pattern, three candlesticks that were formed together. That is the star pattern. So your first candle, as usual, let me start from. As usual, you have a bullish star pattern and a bearish star pattern. That is normal. You have a bullish star pattern and a bearish star pattern. So your bullish star pattern is made up of your first candle must be um a bearish candle. For your bullish candle, let me write the conditions down so that we take them. Number one, first candle. Oh, what's wrong? First candle must be a bearish candle. Two, second candle can either be bullish or bearish. Three, third candle must be a bullish candle. This light is called bullish star pattern. Hope this is taken. This light is called bullish star pattern because the last candle must be a bullish candle. So also it must be formed as a support. Hope you are taking notes. So must be formed as a support. Hope you are taking notes. Okay. So these are our conditions. So I'm going to be looking for these guys in the chat. Um, okay, let's do it this way. Let's just take the conditions for the bearish star pattern. So for the bearish star pattern, your first candle must be a bullish candle. Second candle can either be bullish or bearish, and the last candle must be a bearish candle. And it must be formed now at a resistance. Hope hope I'm not saying talking too much. Like I'm not loading you with too much information because it is what it is. Hope I'm not loading you with too much information. So let's look for this in the chat. Ah, I've shifted my signal. I think it's like this. No, it started from the very bottom. Okay, yeah, I'm cutting it back. So let's look for star pattern examples in our chat. Eh, oh, I'm moving my signal. I'm actually looking for examples. Mm, but nothing here. We'll go to another time for another chat. I mean, sorry. Mm. I just saw a tweezers, a bearish tweezer. So look at it here. Very red. And you see that when it was formed at this resistance, market dropped down. So this is a tweezer. Thank God we saw one. Oh. So I was looking for um star pattern. Okay, I've seen one. Look at these three candles that we formed here. First candle bullish, second either bullish or bearish, last bearish, and market dropped very well. Let's calculate this piece. It should be around 80 pips. Yeah, 80 pips. This was an 80 pips move when this candlestick was formed. Okay. Mm, this was also, although this one is a bearish. Um. Okay, let's just leave it. Market came down, went up, came down again. I'm looking for examples of the star, star, star pattern. This is a bearish engulfing, bullish pin bar. Wow, wow. What happened to star? Bullish engulfing. Okay, I've seen a star pattern here. Your first candle, a bullish candle, sorry. This is a bearish star pattern. So first candle bullish, second candle either bullish or bearish. So in this case, it was a bearish candle. Last one bearish candle and market dropped very well. Okay. Hope we are getting the explanations. Okay, I've seen another one. Let me expand my chart so that I'll see it better. Okay. So we see this one, a bullish candle. Next, this one is even sweet because it's a bearish doji. Then the bearish candle was from and market just started dropping. Let's measure the tips. Whoa, whoa, whoa. This was a 200 pips move. 200 pips move. This is very good. 200 pips move. Okay. Okay, so this is another one. Bearish star pattern. Our market came down. Wait, so it seems like we're not seeing bullish. Let me check for bullish. Hmm, Can we all hear me? Am I still audible? Am I still audible? We're actually looking for let me look at US dollar. Why am I not seeing bullish? Okay, I've seen one finally. So you see a bearish star, a bearish candle, a spinning this is a doji, and a bullish candle, market went up. Let's measure this dip. This move is um this was 140 pips here. 140 pips. This was a good move. Let's look for another bullish pin bar, a star pattern, and that will be all for today. Let me go to another pair. This one just in towards the close of the market. Okay, I've seen one. So we have this first pin bar, bearish pin bar. We have another one, bullish, and market went up, came down, continued with the uptrend. So up the examples are visible to the blind and audible to the deaf. Please, if you have any questions, drop. Let's take them. Let's take a question. This is another star pattern that was formed here. Let me take your questions. Let me take your questions. Let me take your questions so that we'll call it a day for today. It will still be the same pips. No need to check. If it is 200 pips on higher time frame, it is still the same 200 pips on lower time frame. So there is which trade was that there that gave 200 pips? Please, if you remember, because was it this one? It is actually still the same, so it's still the same thing. So the bearish star pattern that was formed here. So okay, let me use this as an example now. So this was like let's say 100 pips here. So if I go to, you say we should use what? 1 hour. If I go to 1 hour time frame, I hope I see. That's one thing. If you go lower, you start looking for the place. You will not necessarily see. Hmm, let me go back and see. Was it this way? Okay. This was 15th of October. So let me mark it. Let me use a price range. This thing. So from here down, you see it's 100 pips. So let's go to 1 hour time frame. So that we mark the date now. You see the 1 hour time frame is still the same. Look at it in an hour time frame. It's still showing the same 100 pips. So it will still be the same. That's all. Okay. So if there is no other question, I believe that will be all for today. Tomorrow we continue. Tomorrow is our last day. Please come on time because I'm somewhere that always keeps to time. If you have noticed, when I say we are starting by this time, we are starting by this time. I don't do African man time. So by 6 p.m. be here on tomorrow as on Friday. So Go through your chat. If you have any question, you can reach out to me in DM. You can actually reach out to me on DM. Send your questions to me. I'll reply them. Go through your chat. Mark Pimba, Mark Engulfing, Mark Dodgy, Mark Star Pattern. Send me to confirm if what you mark is correct. I will attend to you. I will attend to you. So that being said, see you again tomorrow for our last class for the class. Good night.